There's two markets that I'm really interested in, and it's a little bit further out, but maybe not as far out of conversation as we would think. And that's taking a look at the bonds, taking a look at the 2-year, taking a look at the 5, the 10, and finally the long bond or the 30-year. And what you'll notice as I go from chart to chart is it's only the long bond that's still in that downtrend. And we are still interested in that short. You know, I'm looking for a much smaller degree of follow through. You know, we're realizing that there might be some bottoming action here in the long bond, which would also reflect the kind of reversal in momentum and arguably trend. You know, at least it's the previous downtrend is broken. We're sort of getting that break in the 2, 5, and 10. We might be getting close in the 30. I think we might get one more push lower, in which case we'll go ahead and bail on this. And then I'm going to tell everybody no more short side on the bond. And the reason is the bonds are probably starting to factor in something that we've been talking a lot about in this room, which is I don't think we're too far from the FOMC getting to, you know, just committing to like a 3, 3.25 normalized rate, okay? And then they've got to start to shift their tone. Then they've got to start talking about the true headwinds that are in the market. You know, the GDP is not a disaster. It's a good number. Unless you look at it, it's just kind of flat, you know, which is fine. It's a good number, but again, it's kind of in the vicinity of where we are. By the way, before that big 4.2 print we had last GDP, not today's, but the previous, we were heading down lower, 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 got that anomaly number, and then we're back down to where we were for actually back to October of 2017, we're back in that area. And I wouldn't be surprised if we see it start to very gradually stair step down. That combination, plus what's already a contracting CPI, is going to eventually get the FOMC, once they get rates to where they can start to afford to sound dovish and, well, neutral first, or less hawkish, and then dovish. We're going to start to hear that from the FOMC. And I think that the long bond is going to be the last to go. And we're going to start to see the bond traders get out ahead of that messaging. I'm firmly convinced of that. So you're already seeing it on the short end of the yield curve. Now we're going to start to see it on the long. It's just the long is going to take the longest to turn around. So when this happens, we're going to start to, and I think it's probably going to happen on the next move lower. So right about the time we take some profits in this market, we're going to start looking for a long position. It could be with options. It could be in the TLT. But we are going to start looking long in the long bond. When that happens, I am also, and I love this trade, I'm also going to start to look at the XHB. But specifically, when it comes to XHB, I'm going to be a little bit more of a stock picker here. I'm going to look for the needle, not the haystack. We're going to play not necessarily the tide, but some individual boats. And let me give you what those boats are, because this is going to be, again, something that I think we can trade, despite the fact that we might see the longer downtrend persist into Q1, Q2 of next year. There could be some nice moves in the XHB. But what we want to do is look at leaders in the XHB, which means we're likely going to look at some of the bottoming action we're seeing in Whirlpool. The overall markets are really, really accelerating to the downside. Look at Whirlpool lately. I'm not saying it's a strong market, but we're not, hammering away at support in the way that larger index futures are. So Whirlpool, not bullish, but in this environment, not being extremely bearish is a relative performance outperformer. Lowe's would be a heck no. Pulte is a name that I'm very interested in. It's starting to move higher. Has anyone looked at the markets the last few days? And look what Pulte's been doing. So these are the kind of names that are very interesting to me. And these are the kind of names that I think will eventually take XHB higher, but we can find the relative performance leaders, okay? And so the first domino is the long bond, and then I'm going to start looking at individual outperformers, relative strength in XHB. Take a look at Whirlpool, take a look at Pulte, maybe even Toll Brothers. Look at some of those names and, take a look at the holdings. If you've never looked at the holdings before, really simple. All you need to do is go to ETF. And by the way, Mohawk is a big cup of nope, right? So all you need to do is go to ETF, DB, search XHB, and then look at the holdings. So ETFB, right? Look at the holdings and just go down the list and look who is a relative performance leader. All right, gang? And that's just an idea to keep in mind, but that starts with what's going to be pretty soon here, probably the next week or so, probably as early as next week, looking long on the sell-off. So we'll take that last winner and then probably be done with the short side of the long bond.